Salesforce stock has sold off 47% from its all-time high. And despite just having a great earnings report, the stock is down 4.5% after hours. Wall Street is terrified that AI is going to destroy the software as a service business model. There is a widespread software sell-off, not just Salesforce. We have names like HubSpot down 46% from its 200-day moving average, Intuit down 42% from its 200-day average, FactSet Research down 39%, Paycom Software down 38%, and there are many more names. We have Paychex down nearly 30%, Adobe down 26% from its 200-day average. This is the most interesting story of the 2026 stock market. It is being called the SaaS apocalypse. But while Wall Street is panicking and selling anything that has to do with software, I think there are bound to be a lot of great opportunities right now. When you have broad, indiscriminate selling of a sector, there's always opportunities. Great quality businesses on sale. As Warren Buffett says, you should be greedy when others are fearful, but you still have to do your research and make sure you're investing in high quality businesses. And as I'm sitting here today analyzing the 2026 stock market, Salesforce, ticker symbol CRM, seems to be a screaming buy. It is currently trading at its cheapest forward PE ratio ever by a wide margin. This is a company which used to trade at a 40 to 60 times multiple. It is now trading at a 15 P ratio. And Salesforce isn't getting cheaper because it has slower growth. This business is a money printer. They just reported earnings and had their all-time high in quarterly earnings per share. But the market, they don't even care about the fundamentals right now. Everything is on the AI narrative and what's going to happen. This has become a narrative stock. And if the Wall Street consensus narrative is incorrect, this is a huge opportunity. Over the past year, Salesforce has generated $14.4 billion in free cash flow. And over the past 6 years, they've been on a constant path of growth from $3.6 billion in 2020 to $14.4 billion in 2026. I'm referencing the fiscal year. At today's stock price, Salesforce is trading at a $182.5 billion market cap. That means they are trading at 12.6 times free cash flow. 12.6. Analysts are projecting continued high growth. Salesforce's own outlook is projecting high growth. So in today's video, I'll give you my thoughts on the risk-reward opportunity with Salesforce. I will detail the bear case as well and where the bears are correct, how I think AI will impact their business, and whether or not Salesforce is a great buy right now or something you should avoid. With that said, let's roll the intro.
The following reflects the opinions of a man who spends far too much time thinking about stocks. Please do your own research before making any investment decisions. Nothing in this video is personal financial advice. Continue at your own risk.
My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoyed the video. So what is Salesforce? It's an enterprise software company. Salesforce at its core is a CRM, customer relationship management. That's why they have the ticker symbol CRM. But over time, they have basically become like the ultimate enterprise software company. They have extremely deep tools for everything from sales, service, marketing, commerce, analytics. They even own Slack. They've become a hub of business data, and they have a massive developer ecosystem of different products built on top of Salesforce. To be honest, they are such a diverse company that it is difficult to explain. Even people that use Salesforce all day at work likely only know part of the business. And the reason you see Salesforce and all of these software companies selling off right now is because of the advancements in AI. And it comes from really two different fronts. On one side, we have all the advancements in the models. They've gotten fantastic at coding, and it's looking like we're going to be able to rapidly be able to develop full-blown applications, and the pace of software development is going to increase massively. So much so you have people saying that everyone's going to be building bespoke software custom to themselves, and you may even see the idea of software becoming abstracted away from you. People that are AI bulls, they're assuming that 10, 15, 20 years from now, most business at a high level is going to be done purely through AI. And it may not make as much sense to have agents, and the value of these software products and dashboards built out for humans to use may not actually be the best way that these agents interact. And you probably could spend hours just talking about that. And if you spend time on X or really in the AI space on YouTube or anything, or if you're in the community, people are talking about this. So on one side, you have disruption and rapid progress in software, potentially creating new competitors, and the need to adapt how the platform delivers value to customers. And then on the other side, you have AI becoming so good that there is worry of massive job displacement among knowledge workers. And in my personal opinion, over the next 2 to 5 years, from a capability standpoint, that is definitely true. But I think people are underestimating how long it will actually take for this to diffuse throughout the economy. There is a huge difference between a 10 to 20-year transition, having more digital employees or agents in your workflow, and these hybrid enterprises of humans and agents working together. That is a huge difference being a 10 to 20-year transition versus all of this happening in a year or two. But in a world where there's mass layoffs, that would hurt enterprise software businesses like Salesforce. A large chunk of their revenue is seat-based. So that means you need employees, you need users at these companies. And the bears will argue that Salesforce is a very expensive product. So there's an incentive to potentially reduce cost there. But the interesting thing is, in the reality on the ground, none of this is actually happening yet. And it is not as though Salesforce is standing still and doing nothing. They have 76,000 employees. Tens of thousands of software engineers at their company. And Salesforce is in an extremely strong position. They already have all of these enterprise relationships with all of these customers. They are rapidly integrating AI, agents, and all of these new value propositions into their products. As an example, you have Agentforce, which is basically an automated customer support service. So they help their customers, which are enterprises, create AI customer support solutions. That's going to be a big growth business. They just introduced Slackbot, which is basically an AI agent within Slack that you can chat and ask questions to. And this is the early innings of what I think will be a huge trend over the next 5 to 10 years, which is the idea of a digital coworker or a digital employee. And I'm talking about early innings. And Salesforce, they're not going to necessarily dominate that, but they're in a pretty strong position to bring that to the market. And thinking from first principles, the idea of digital useful labor, that's obviously going to be an incredible growth business in the decades to come. Salesforce already has this extremely diverse ecosystem of products, and these are data heavy. Companies spend years building out these systems to be on Salesforce. I don't think it's realistic for these large enterprises to just rip it out. Now, you may see the trend of a lot of small businesses and startups not using Salesforce, but to be honest, they're in the large enterprise business at this point. And Salesforce, they have the data. And one of the most important things with AI is data. It needs the context of your operations. And they already have this business called Data 360. This seems like it's going to be a pretty big growth business. It's the idea that you want all of your data in one place. So not just all the Salesforce data, but connecting to all of these other third-party applications. And you can see a list here of just some of those options. Salesforce is also integrating and becoming available in these top AI products, whether it's Claude or ChatGPT. And if we look at the summary of the latest quarter, which just reported from Salesforce, this was their Q4, you can see that the combined annual revenue for Agentforce and Data 360, they consider this to be their AI native products. That reached $2.9 billion of ARR, annual recurring revenue, which is up 200% year over year. So Salesforce, it has a new growth business, and there's currently no actual evidence of the rest of their business declining. They report that they had over 29,000 Agentforce deals closed, up 50% quarter over quarter. They ingested 112 trillion records in their Data 360 business, which is up 114% year over year. They reported record revenue of $11.2 billion, up 12% year over year. EPS came in at $3.81, again a record. And they gave guidance for full year 2027 with adjusted EPS between $13.11 and $13.19. They're also projecting 10 to 11% revenue growth. They even set a long-term revenue target of $63 billion by fiscal year 2030. Salesforce, by all of the actual evidence on the playing field, it's still a growth business. So while there are fears over AI risks, and believe me, I am into AI, I am a bull, and the capability is going to be massive. And over the long term, I'm talking 5, 10, 20, 25 years, it's going to be completely transformational to the economy. But I think people are underestimating the ability of some of these tech companies to adapt. I think people are also underestimating how important sales is in the enterprise business. Salesforce already has the relationships. I bring this up when I talk about Microsoft too. These large Fortune 500 companies, a lot of them, they're not tech companies. They are not AI native. They are going to be the ones that are slow to adapt, and they are going to be looking to enterprise software companies like Salesforce to provide solutions for them. So as we dive into Salesforce's business, you can see their revenue per share. It's been a fantastic track record of growth. 10-year CAGR of 15.8%. And this is really how beautiful some SaaS businesses are with the reliable revenue growth. It's year after year after year. And that's why these companies used to trade at such a high multiple. But now there is uncertainty. People don't know what these businesses are going to look like in 5 to 10 years. And so much of stock analysis is about certainty. It's based on the future cash flows of the business. How do you do a discounted cash flow? You take a look at the future cash flows the business will generate and you discount them back to the present value today. But if you have no clue what those future values are going to be, that's why people are worried. There are a large chunk of people, especially people in Silicon Valley, that think there's going to be mass disruption. And they're not entirely wrong, but I do think it's going to surprise some of those bulls how long diffusion actually is going to take. There is a capability overhang with these models. It takes time for them to diffuse throughout the economy. So if we keep going through the business of Salesforce, let's take a look at their free cash flow per share. It's growing at a 10-year CAGR of 26.42%. They just had a record free cash flow per share this year of $15.16. That's up 17.29% year over year. So it doesn't look like Salesforce is a dying company yet. The company has negative net debt of negative $2.8 billion. Their balance sheet is strong. They don't have any debt problems. And because they're generating so much cash, they have started repurchasing shares. They have also started to become a dividend paying company. They had their first dividend raise last year of 4%. It'll be interesting what they choose to do later. And the current dividend yield, 0.87%, but it's an extremely low payout ratio, 20% based on earnings per share, 11% based on free cash flow. And the company, because they're so free cash flow positive, they have a high capability to return capital to shareholders. In fact, they just announced that they committed to $50 billion in new share buybacks. So again, if you're sitting here and you think Salesforce is going to keep growing in the future, and you're not really buying into the speed of this AI disruption, this really is looking like an attractive opportunity. The company is trading at 15 times forward earnings. It has never been this cheap. With that said though, I have no clue how long this will last. Salesforce has looked cheap since 2022. The multiple has compressed. People have been worried about the economy and seat growth, and there has been lower seat growth in these large enterprise software companies. You're seeing it in Microsoft 365 as well. But the question is Salesforce just getting too cheap to ignore? Analysts are still expecting double-digit earnings per share growth in the coming years. So you sit here and you're taking a look at something like Coca-Cola trading at nearly 30 times earnings, and it's going to grow 3 to 5% a year. Meanwhile, you can get something like Salesforce at 14.5 times earnings, growing double digits. If the growth continues and they prove to have durable cash flows over the decades to come, this is looking like a no-brainer. If we take a look at the analyst price targets, the current consensus target is $311. That implies the stock is 62% undervalued. The lowest price target on Wall Street is $235. And the current stock price before it sold off after earnings was $191. So let me know in the comments what you think about Salesforce stock and whether or not this is a buying opportunity. I will be transparent in that I used to own the stock last year, and I currently don't own any Salesforce stock, although it is looking like a great buy. I have my mental list of things to buy, and this is so close to being on it. And if the software sell-off keeps happening, I might have to open a position again. Thanks for watching. Make sure to leave a like, comment, and subscribe to the channel. And if you want to use the research tool I showed throughout, it's all available at dividenddata.com. Thanks for watching, and I'll see you in the next one.